There is so much going on behind the scenes, and things already look like they can't get any worse with rising inflation and an impending recession. Warren Buffett, a well-known investor, however, cautions investors that the end is close. Are things really that horrible for Buffett to warn? See some of the recent cautions Buffett has given investors by watching this video through to the conclusion. You'll undoubtedly pick up a few tips on how to better protect your wealth and yourself. Dramatic changes can occur in the world. Many well-known names can be found among the top 20 businesses in the world today. Apple is ranked first on the list with a market value of well over $2 trillion, and the 20th business on this list is marked at almost $330 billion. How accurate do you think you would be if someone came up to you and asked you to predict how many of those companies will be on the list in 30 years? Not every company on the list today would still be around after 30 years. There is a minor possibility that every business on the list would be totally different. Let's take a look at the top 20 companies in 1989. You'll see that none of them are still in the list. Although we are now, we're sure investors back then thought they had a solid understanding of the stock market, and some would have bet that the company would last forever. Back in 1989, Wall Street and investors were so confident in themselves, and according to Buffett, same confidence still exists now. Everyone overlooks the obvious truth that the world might change drastically and that the majority of investors don't profit from those changes. Only capitalists profit from that modification. Trading applications have become increasingly popular over the past few years, but speculation is not investing. Without naming any names, one of the most well-known apps that YouTube routinely promotes saw more than a 50% rise in users during this time. These apps' appealing user interfaces, gamification, and promises of no cost have drawn a lot of new investors to the stock market. Nevertheless, that is incorrect. Warren Buffett asserts that this may be the latest and fastest influx of day traders we sought to make money through overnight stock trading that he has ever seen. Unfortunately, trading Apple futures and options does not constitute investing. It is only conjecture. Additionally, there are more gambling habits in place. Special Purpose Acquisition Companies, or SPX, have also gained popularity recently. Investors invest in SPACs, which are publicly traded shell firms, in order to float an unnamed private company. Munger and Buffett have supported practically everything SPAC stands for throughout the years. SPACs eliminates patience, which is a fundamental requirement for successful investing. A SPAC's capital has to be used within a predetermined time frame, usually 2 years. If not, the investors receive their money back, and the SPAC's manager does not receive their bonus. Buffett claimed that if they put a gun to his head and made him choose a company to invest in within 2 years, he would be able to find it. Of course, whether that business will be successful and reward the stockholders is quite a different matter. Buffett mentioned a number of companies that were active in the U.S. automotive business in the early 1900s. Despite being in a highly lucrative industry and riding strong trends, almost all of these companies collapsed. Look into the airline industry because the numbers there might be far worse if you think Buffett was just trying to scare shareholders. The cannabis industry is repeating the same pattern right now. The industry will undoubtedly be successful, but what are the possibilities that the majority of investors will choose a winner in that sector? It's more likely that the company that seems least profitable at this time will turn out to be the best. Warren Buffett recently recommended shareholders during a meeting to stay away from the fixed income market. Warren Buffett encouraged debt investors to embrace themselves for gloomy future days after a sell-off destroyed government bonds and sent shockwaves across international stock markets. The 90-year-old CEO of Berkshire Hathaway cautioned shareholders in his carefully regarded annual letter against investing in the fixed income market, in which Berkshire Hathaway is a big player. He cautioned that pensions who invest in fixed income securities, pension funds, insurance companies, and pensioners globally who invest in fixed income securities run the risk of having a bleak future for regulatory and credit rating purposes. Competitors need to focus on bonds. Bonds are also no longer a smart investment. Treasury prices have dropped significantly as a result of recent moves among investors who were expecting stronger economic development. Concerns about an inflationary trend, however, little, and the likelihood that central banks may need to alter their stimulative policies have been rekindled by the prospect of a global upswing. Before the Treasury market sell-off, many investors changed their profiles by acquiring higher-yield, lower-quality debt. Buffett expressed concern over bond buyers and insurers' attempts to boost the meager profits presently available by moving their purchases to liabilities backed by shaky borrowers. Risky loans, he continued, are not the answer to low interest rates. 3 decades ago, the savings and loan industry dominated itself in part as a result of the general disregard for that law. At the end of the year, Berkshire had significantly less corporate debt holdings and around $103 billion in short-term treasury notes. The business has longer-term debt of $3.4 billion with the US government. Anytime there is disagreement, the value of money will fall, Buffett continued, at least in the ones I'm aware of. I've seen it happen in every battle. So, rather than clinging on to cash, you want to secure assets. Buffett emphasized that the American stock market rose during World War II and had since trended upwards. He earlier asserted that the challenges in Russia prevent him from conducting businesses there. American businesses will soon be worth more money, claims Buffett. As the value of the dollar declines, you won't be able to buy as much with it. However, he went on to say that over the next 50 years, owning useful assets will be preferable to possessing pieces of paper.